Markets are ripping higher, but consumer sentiment is crashing. What does that disconnect mean, and how can we position for it? This week, we're watching Intrepid Potash for a potential breakout, breaking down key earnings and what the economic calendar could signal next, plus June seasonality and how it historically is set up for traders. If you're serious about staying ahead of the market, hit that like button, subscribe, and follow wherever you listen to podcasts. Now, let's get into it. Welcome back to StonkCast, the market show for the average Joe. Whether you're a diamond-handed degenerate looking for the next 500% play or a more conservative swing trader or investor, we've got you covered. We tackle the latest market news, give our 2 cents, and maybe, just maybe, help you make some money along the way. Happy Sunday, everybody. Happy Memorial Day weekend. We are back here on StonkCast for a market breakdown for the week ahead. Keep in mind the market is closed tomorrow, but wanted to get this out so we can get prepped and ready for the week ahead. So let's jump right into it. I want to kick it off with the consumer sentiment. We are seeing right now a disconnect between the market, what the market is doing right, and what we are seeing as far as consumer sentiment. So generally speaking, when consumer sentiment is down or low, the market follows suit. If we look at 2007, which for those on YouTube, as you can see this graph of the market as it relates to consumer sentiment, we can't see 2007 on here, but just know consumer sentiment was low in 2007. Of course, we had the market crash there, led by the real estate industry. And basically, if we take a look at this chart here, consumer sentiment was low in 2020. It was right around 72-ish, something like that, obviously with COVID, and the market cracked there as well. And then if we also take a look at consumer sentiment in 2022, it was also low with Russia invading Ukraine. And we also saw the market kind of give way there as well to a more short-term bear market, I guess you could say. Basically, what we're seeing here on this graph is that every time consumer sentiment takes a dip, the market typically follows suit, but we're seeing a bit of a divergence of late. The last consumer sentiment report that came out was one of the lowest readings ever recorded. That is massive. Meanwhile, the market is about 2-3% off from an all-time high right now. So there's definitely a disconnect between the market and what we're seeing from consumer sentiment. I've talked about this before, but the hard data and the soft data is kind of contributing to this, I believe. If we look at the hard data with employment numbers, unemployment, CPI, inflation reports, things like that, so far they've looked pretty good, hence the reason why Jerome Powell and the Fed have been hesitant to, reduce interest rates, right? Meanwhile, however, as I just said, consumer sentiment is seeing close to an all-time low. And so we have this disconnect in the market, and I think it's something we need to be paying attention to. Basically, the idea here is that market euphoria does not equal economic reality. And that's what we're seeing right now from essentially this graph. We're seeing this divergence between the consumer sentiment, where the market's at right now, and it's very, very interesting to me. We actually saw consumer sentiment dip below, where the market is at back in, late 2021, heading into 2022 as it continued lower. And basically, as far as consumer sentiment is concerned, we're about as low as we were back, in 2022 when Russia invaded Ukraine. Inflation was at an all-time high pretty much at 9%, it was very high. And so I noticed this when I was looking at some of, these charts over the weekend. It's very interesting to me, and something that we need to be paying attention to heading into the week ahead and really heading into the summer, right? So, just something I want to put on your radar there. So Let's take a look at the market, how it stands after the previous week that we had. Taking a look at the heat map from Friday, had a mixed bag. The market was down 0.6%. Let's take a look at the S&P. And I added onto my chart here, just for reference point, the 20-day moving average along with the 50 and the 200. And if we look at the S&P, we are still below the key level 5,900, but we are above the 20-day moving average, more of a short-term indication, right, of where the market stands right now. The VIX is currently sitting at 22.29, so it is above 20. And, showing some more fear gaining back into the market based off what the VIX is telling us right now, relative to, where it had been the week prior, where we were below 20 for most of that prior week, but now we are back above 20. So something to be mindful of. We are seeing some volatility coming back into the market, and the rally that we have had over the past month or so is starting to take a breather. So just something to keep an eye on. Consumer sentiment isn't the end all be all, but it is something to pay attention to, right? So that kind of divergence isn't just noise, it's a signal, right? So before we jump to conclusions, however, let's look at where the market may actually be heading for this week ahead. Again, a shortened trading week. Monday we're off with Memorial Day. I want to take a look at the economic calendar to see what we got coming up. So we do have, like I said, Memorial Day on Monday. Heading into Tuesday, we get durable goods orders coming out at 8:30 a.m. According to Bloomberg, this is one of the more volatile economic events that can happen, so definitely want to have it on your radar. In addition to that, we do get the CB Consumer Confidence Report for May, which is going to be coming out at 10 a.m. Previous was an 86 reading. We're expecting 87.1. Now, as far as Wednesday, May 28th, we don't have a lot going on as far as volatile economic reports that could really move the market. However, we do get a FOMC meetings report coming out at 2 p.m. So this is something I'm personally going to have on my radar. It's basically going to be a detailed record of the committee's policy setting meeting held about 3 weeks earlier. The minutes offer detailed insights regarding the FOMC stance on monetary policy, so currency traders carefully examine them for clues regarding the outcome of future interest rate decisions. So, excuse me. So we did have, the Fed announce that they're basically holding where they're at with their interest rates. And so this will be very interesting to see the FOMC meeting minutes, in my opinion, just to see if we get any more details. But as of right now, it looks like we're not going to see an interest rate cut at the earliest until September, maybe later, depending upon how the data and how tariffs shake out. On Thursday, we have GDP coming out for quarter over quarter for Q1. This is going to be interesting as well. I want to see if there's any revisions here, but we did have that negative GDP report that came out a few weeks back that really shook the markets, and a lot of that was kind of skewed by tariffs and a ton of imports as people try to front run the tariffs that are coming. So something to pay attention to there. In addition to that, initial jobless claims as well coming out. Want to see where that number comes in. Previous was 227,000. We do have a projection of 229,000, so slight uptick there. That comes out at 8:30 before the bell goes ding. And then we get crude oil inventories coming out at noon. That's also going to be important as well. And that's about it for Thursday. Taking a look at Friday, we get core PCE price index year over year for April. Core PCE price index month over month for April. So PCE is also going to be important to pay attention to on Friday. Michigan inflation expectations for 1 year and 5 year coming out. Michigan consumer expectations as well. So that's about it as far as the economic calendar breakdown. And these are things that could, shake the market or confirm the current rally. Definitely something to pay attention to. Of course, the calendar only tells part of the story. What companies are saying this week will matter just as much. I want to take a brief look at what we have coming up this week as far as earnings. And we have some big ones coming out Wednesday, for example, May 28th, we will get earnings from NVIDIA. Obviously, this is highly anticipated due to its leadership in AI chips. We want to see how one of the biggest companies in the stock market is actually doing. Analysts do expect Q1 revenues to rise 66% year over year to $43.3 billion, with EPS around 0.73. So that's what we're looking at there. I think investors will definitely want updates on AI demand as it relates to tariffs and how that's impacting NVIDIA as a company, right? Imports of U.S. Impact of U.S. export restrictions to China, which could affect future guidance for the company as well. In addition to NVIDIA, we got Salesforce, we got HP Inc., we got Synopsys. Thursday, we got Costco reporting. That'll be a good insight into the consumer, how the consumer's doing. And Friday, we get PDD Holdings coming out. So that is the parent company, if you don't know, of Temu, reporting before the market opens on Friday, May 30th. Investors will look for insights into international expansion and e-commerce competition. So basically, this week's earnings are coming, amid heightened market volatility, as I mentioned, with the VIX starting to spike back up a little bit. And that's influenced by, the rising treasury yields, as we've already covered, and renewed tariff threats from President Trump, right? So tech stocks have been particularly affected, with the NASDAQ composite down 2.5% last week. So this is something that, is weighing on NVIDIA, for example. So if NVIDIA gets a really good earnings report, that'll definitely give a lift in the market, in particular to the NASDAQ, the tech-heavy NASDAQ, right? So that's a brief look at earnings this week. Overall, not a whole lot going on, but the ones that are happening are very notable and important. NVIDIA, of course, is a big one, and definitely something to pay attention to this week. And while big names report, I'm watching one under-the-radar stock that could quietly explode. I want to give a shout out to, I believe it's Stephen Nash on YouTube. I came across this video regarding a company called Intrepid Potash. I don't think it's on anybody's radar right now, and I think it really should be, given some of the things that, I've been noticing on this company. So first of all, what is potash, right? That's a word you don't really hear that often. Potash refers to various potassium containing salts used primarily as fertilizers, right? So we're looking at a company that deals in the agricultural space, and potash is a crucial source of potassium, a vital nutrient for plant growth, especially in fertilizers, right? So you might be asking, Brandon, why are you paying attention to an agricultural stock? Well, I'll tell you why. Because of the fact that this company could be greatly impacted from some kind of resolution with Russia and Ukraine, which are two companies that do a ton of exporting when it comes to farming, agricultural activity, and things like that. This is definitely something that I found interesting. And again, it's not something that, it doesn't have a lot of, I guess you could say, speculative fervor. This isn't something that is on, anyone's radar, in my opinion. So I want to take a quick look here at the chart for it. The ticker symbol for this company is IPI. So let me go ahead and pull it up here on Thinkorswim. And the interesting thing about this is that it was trading at $121 back right before Russia invaded Ukraine. Of course, when Russia invaded Ukraine, a lot of their business kind of went by the wayside as both countries focused on the war, and it dropped off. This is a 5-year weekly chart that you're looking at here. So that high was back in April of 2022, and it sold off from that high as low as $18, and really has just been in a base since about May of 2023. And basically over the past month, it is starting to pick up some momentum, right? And so this is looking from a technical analysis perspective is a very attractive potential trade candidate. As far as the 200-day moving average on this 5-year weekly chart, It did cross above it a couple weeks ago and is currently holding above it, which is interesting. It's currently trading at $36.63. So I just wanted to throw this out there and put it on your radar. It's definitely something I'm going to be watching in the weeks ahead to see if it, sets up. It's an excellent risk reward setup, in my opinion, for, someone who wants to, swing trade. I wouldn't say day trade, but definitely on the swing trade side of things. If you're looking for, something, before everyone else is paying attention to it, this would be it. And this is something I would classify as, it's not a sexy stock. It's agricultural in nature, right? We're not looking at, NVIDIA, something on everyone's radar in the tech sector, right? And, just taking a look at the options chain for it right now, the current IV percentile is 26%, right? Meaning that 26% of the time in the past 52 weeks, the implied volatility on this company, on the stock, has been lower than it currently is. That is a very, very sweet spot if you are a buyer of premium, if you're looking to buy calls or puts for that matter. Based off of what I've said, obviously you can kind of gather I'm looking at calls here. It's an attractive area to be in. The implied volatility right now on it is 39.62%. And the options chain, I will say this, it's pretty light. So if you are looking to buy anything in the options chain on this, be very careful. Those bid-ask spreads are going to be probably kind of wide. Total volume on Friday was only 230 contracts. So it isn't a lively liquid options chain. So you need to be mindful of that. However, if this thing does get moving, that could easily change, right? So some of the things that I'm looking at here, there are currently only 4 options here. You got June 20th, July 18th, September 19th, and December 19th of this year. So if we take a look at December, this is where I would be looking at. And if we just take a look at some of these contracts, they are not too badly priced, in my opinion. Although I will say that the open interest, right, on some of these strikes, again, it's not super liquid relative to some other companies that we've looked at in the past, like Tesla, AMC, GameStop, right, where their options chains are more filled out, I guess you could say. But one thing I noticed here, the $50 strike for December 19th has an open interest of 112. But the bid-ask spreads are going to be super wide, so you want to use limit orders if you are looking at this. You can also not even play options, and you could just play shares on this. But I do like the setup. As far as basically the short interest, I wouldn't really consider that notable. The short interest percentage of the float on Intrepid Potash right now is only 3.43%. So it's not large. This isn't a short squeeze candidate, in my opinion. This is more so speculative in the sense of what's going on around the globe. If we do get a resolution between Russia and Ukraine, this company is going to be right back in business because Russia and Ukraine both are going to need to get back to that agricultural space and make sure that they're producing, right, so they can export and help their respective countries. So Intrepid Potash, that's something that I'm going to be watching, and I would highly recommend to, at the very least, have it on your radar for the week ahead. Short-term setups are great, but June as a month, how does it look? It might offer something even better, or maybe not. We want to take a look now at June seasonality to see how the market has done historically in the month of June as we close out May. Seasonality trends are important to pay attention to. They can give you a general idea, not a guarantee, but a general idea of how the market performs in that given month, right? Relative to the previous, however long you're looking at, 20, 30 years, things like that. So taking a look here based off of Equity Clock, great website when it comes to seasonality. Highly recommend utilizing it for any trade ideas that you may have. But as we take a look at June, generally speaking, overall, I would say June is not a crazy month. If we take a look at the past 20 years in June, we usually start off pretty strong, and then it kind of fades towards the end of the month. However, as we enter July, July is historically a very, very strong month. beginning of the month of June, a bit more bullish than the end. I would say towards the end, historically, it's a bit more bearish. If we look at June, gain frequency is 60%. Max return was in 2019 of 6.9% on the S&P, with a minimum return in June in 2008 of negative 8.6%. So definitely important, I believe, to pay attention to seasonality and how it's going to impact, your trades, right? Your investments. It's a good thing to look at just to have an idea, right? Again, it's not a guarantee that, hey, June is going to start off strong and then end week. It could be the opposite. We could have an entire June month that is insanely bearish or bullish, but it is important to, pay attention to, in my opinion. And that's about all I got for you on this weekend update heading into Memorial Day tomorrow. Hope you have a fantastic Memorial Day. Keep in mind, I will be back on Wednesday for a market check-in to see where we're at. And we will have NVIDIA earnings happening on Wednesday, so I will be covering that. We are starting another mini-series coming up on trading psychology, a very, very important topic. And if you haven't checked it out already, we just wrapped up our investor series on the Intelligent Investor written by Benjamin Graham. So make sure to check that out if you are into some more long-term investments. I did drop in the last episode on part 4 of that series a Google sheet where you can easily track and find companies that would meet Benjamin Graham's criteria updated for 2025 for an enterprising investor. So if that sparks your interest, make sure to check that out. Remember to like, subscribe, follow wherever you listen to podcasts. Appreciate the support. And remember, folks, plan the trade and trade the plan. Have a good night.